right, good morning, good evening. Saying that as a side effect of not being able to adjust to Central Time post Japan, which is kind of annoying. But welcome to week, I believe it's 28 minus 2. I'm probably wrong at this point. It's kind of blurring together. I'm too far gone at this point, right? But stochastic volatility, right? So, I think I made a party joke at some point with stochastic calculus, and it's like, how does this random dude know about this crap? And it's like, well, I'm a nerd, so well, it's not. But uh side effect of not knowing the actual calculus but knowing the topic. It's kind of funny. But random volatility, the volatility bombs, volatility spikes, just randomness in general. Tethering this to the yen video I just made, or like the case study I'm kind of continuing from last quarter, and just some trading activity, and kind of just wheelbarrowing this conversation. So, well, the yen trade's been interesting. I've been kind of working case study for now, and I've always been independent here. So, with working that, you have all this history now. I think it's up to like 140 days, give or take. If I'm off, I'm off. But that data, right? It's like, I think since the beginning of the year, our yen's only traded maybe plus seven, plus 7 yen, or has depreciated 7 yen, or I don't know the percentage right now, but the currency's been devaluing, and it'll be very interesting with like rate hikes and Bank of Japan and intervention and whatnot. But as a trader, as just kind of mental modeling, like, okay, sentiment wise, yen's trading for within a 2 yen range week to week typically. I think the number I had was like, on the lower boundary it would be down roughly 0.70, and then on the upper bound, um what was it, like 1.2, 1 point, um 1 point something, like right over 1, but it wasn't 1. And that within that barrier, right? So on the negative side, down, in the or you'd appreciate, but down, right? And then on the opposite end, it would depreciate. It's a mess. But when you're in there, right, you're trading daily, and so, like, in my case, right, just throwing a string on with the forecast events, prediction market stuff, and just like plopping down, okay, within this price range, and maybe not set and forget, but settlements kind of become this weird volatility bomb, where it's like, oh my gosh, why in the world is it taking till 6 p.m. when the contract settlement time actually says 11 p.m. CST that it should be paid out, or CT? Annoying, very annoying, especially when what is like exchange traded derivatives, ETDs, I believe. I forget. I remember seeing like the product prospectus worksheet kind of thing when I was at the gym today. Um, then you have other products, and I think just jumping from here into the option side of things, where personal options have been assigned in this last like 7 day period, where I had stumbled on Groupon, where the pricing of the option was in the money, or out of the money, right? But because it was so like negligible, it was assigned. And you're like, okay, well, I was expecting to not get assigned by, I don't know, let's say 40% or 50%. It's like a coin toss, and you're like, okay, I saw it coming, but I'm kind of irritated about that, because functionally, like, I could have probably bought that out for $4 or $10 and done deal. Um, Now, on the other end of things, right, with Palantir, where I mean, I saw it coming, but that's because the equity's been, you've been seeing the equity being wiped out, or the appreciation in the stock, whatever you gonna call it, the price point, the price has crashed, and while the value of the company is down, this product that you sold for a certain strike is now worth even more to if you were to sell more at this this price point, and obviously you get assigned, and that's kind of the end of the deal, right? You took on this premium for assignment, essentially, right? The right to the whole spiel, the right to have buy this from somebody at this fixed price, for this fixed premium at whatever price point. uh that's intriguing. I mean, especially with having like 150% of your account value and margin available uh, immediately after settlement is very um, appetizing. But at the same time, having been margin called earlier this year, I don't want to revenge trade. At the same time, structurally, like, I cannot sell naked puts, but if I could, I would be a weapon of mass destruction. Now, it's just fun. It's odd. It's funny because this randomness that occurs, or the volatility that just randomly pops up, right? I was expecting to get early assignment, but not this early. There's still like 6 months to expiration. It was 6 months to expiration on those contracts, but aside from that, like, the whole viewpoint is like, okay, so I'm getting this at discount now. I'm getting the stock at discount. I should probably be working my covered calls against this. Because the way I see stock, kind of, at least now, it's kind of like inventory, or you're just trying to flip this for a profit, or you're trying to scalp this. Obviously, I'm an investor, but I mean, the mentality's kind of shifted where I don't want stock. I want to, continue that. For lack of better terms, at the moment, that come to right the forefront. Just kind of, I'm gonna sell risk for, or I want to sell insurance, right, for income or cash flow per se. But obviously, you can crank it or work it or however, but certain price points, certain strikes don't seem to be worth it. When it comes to premium to um, principal, or the amount of premiums you get for the amount of risk you're taking, or assignment risk, whatever. um, I think there's a weird, like, visualization thing, or some type of thing where you can kind of tell when it comes to deltas, or your theta. Now, it'd be intriguing to try to work that with, like, I don't know, something more volatile, more new, recently IPO'd. I don't want to pick out names, but that could be its own kind of thing anyway. Aside from that, like, it's just kind of like, assignment, the randomness of assignment. There's a coin flip chance of here or there, right? I guess the probability of getting assigned on certain contracts kind of increased per month, as I think when I sold, I think it was March for the Palantir stuff. But sidestepping here, to the company side, while I was doing the inverse of what I was doing in my company stuff with Blue Owl specifically, I've talked about this pretty public trade, but doing it personally, trying to sell those freaking puts, does not work for me in my PA. However, company account have all 2,600 whatever shares. There's so many options, covered calls against this thing that I have set up across the rest of the year. They're all green. It's all either in the money, or deep in the money when it comes to what I will just call the decay premium, or premium decay. There's probably a more technical term, but, like, looking at this, you're like, oh my gosh, okay, so I can clear out the book from, let's say, August or whatever, or like whatever's out there, like the volume that I have out there for August or whatever, November or July, June, maybe not June. June's over. Um, Essentially, it's weird, right? Like this whole operator viewpoint is kind of like it's the hardest thing to try to not wrap my head around, but like persona wise or the mentality wise, it's just hard to wrap around. You're like, I got a stranglehold on exactly what I want to do. I have the clarity, I have the vision, but when it comes to randomness, maybe that's the IV. It probably is. When you got a hold of this thing, you got it by like a stranglehold, and it's not exactly working out how you want it, even though it is working. It's kind of frustrating. But then, it's like other components. Maybe this is why like multi-asset is probably the most annoying thing to try to work around, because you're like, okay, this one specific instance, this one specific thing is all risking everything in one thing, right? And I believe in concentration. I think that's more typical to someone who's just like, okay, obsessive, or you want to work with one thing and figure out how every single piece of it. At the same time, now it's just like, created enough premiums from selling short, like, trying to offload the stock. What's next? But at the same time, you're like, well, I can keep this going probably till the end of the year, and then just offload this because I don't want to, I don't want to hold this anymore, because it just is the most infuriating thing to, I don't know, trade or try to work around. I am at a certain point where I think it's just simpler to just say, let me just get rid of it all at certain strike, and full blast that sucker every week, which probably would create a decent amount of premium week to week. But at the same time, like, uh, you know, volatility wise, if the price appreciates of that equity, you are kind of screwed when it comes to covered calls. Now, I know you're collecting like pennies in front of a steamroller. That's the what verbiage that I think a decent amount of people online say. But it's like, if you've been running some strategy for like half a year or more, and it's been working out most of the time, except for the times that it blows up and you have to recover and readjust and whatever. Um, why, you know, what what forces you to say that? Because you seem biased, where I'm a little more agnostic when it comes to product, and it's literally just an equity. Like, there's nothing special about it. I'm not buying into some junk ETF or whatever. But I don't know. I think that's like part of that world, this world where it's like, okay, literally you can work anything and try to make it work. And I guess there's some type of frustration where you're an experimentalist, and someone's telling you, no, it's not how that works, when literally you could probably build something better than somebody else with 3 assets and have it more diversified and have a higher return than them. But obviously you should probably backtest that. But at the same time, that's all history, right? You don't have any idea what's in front of you, right? So, um, I mean, I think you have a sense for it. I mean, that I see that with yen, but at the same time, it's kind of like, okay, well, it's probably going in this direction by, you know, this or that, and daily. Now, when it comes to like, I think that's where the fun is with like pricing models and volatility models and what. But obviously, not coming from computer CS background, it's a little harder to like try to form that or morph that. Even if obviously mental modeling kind of is there. Right? If there's a 10% drop, it's like, okay, well, I mean, it's now at market value. There's something subjective when it comes to price and value. And it's kind of silly when you're like, okay, you do all this modeling, and you could just plug this into a machine and have it spit out whatever with your assumptions and get what you want. So I don't know. This will play into some of the future stuff that I'll be working with on I'll do case studies and projects with. I just got onto the Claude plan, Pro plan, and see how I can work that out and kind of see, you know, uh, what work my uniquity into even being even more unique or weird or whatever. Like the identity and persona, and kind of work it right. I have taste. How do I curate it, but also make it more sophisticated? And there is that viewpoint that's going to be battling, and I think that's just part of being in this arena. So that's all I have for this week. Thanks for stopping by.